Clay Patton on the Rural Radio Network, and it's time to take a look here at your weekly commodity trade as we talk with Darrell Holaday, Country Futures in Frankfort, Kansas. And Darrell, I've just taken some limited looks at from a weekly perspective, but for some markets like corn, it looks like we started almost where we ended last week or started this week. It has been a wild week of trade, though, with plenty of headlines to still move things.
Yes, it sure was. The early headline, of course, coming out of last weekend, it happened during the weekend where Russia announced they were going to pull out of the grain corridor agreement, and so we opened sharply higher, corn and wheat, on Sunday night on into Monday. Now, wheat led it higher, and corn went with it, but by the week's end, or it didn't take long, by Tuesday, they basically said, we just suspended it, now we're back in, and bottom line is we've talked a lot, that Russia needs the Black Sea open just as much as anybody does. They've got a lot of products that need to move, fertilizer and grain. They're doing it to try to get some leverage to maybe get better conditions situation. And matter of fact, to skip ahead to the week's end, in the negotiations to extend the corridor beyond the end of November, they're proposing I think what their big hang-up is that they need a particular bank's sanctions lifted on it, so they could coordinate a lot of it. And I think in the end they're probably going to agree to that as long as there's no military equipment that's moving across those books, if you will. And I think that's where we're headed. So that's kind of the full circle of that story. And by the time that happened on Tuesday, we were, corn and wheat had given back about all they'd gained on Monday. So that story kind of came and went. And I think maybe that's going to go away until something more defined occurs within the war itself, which continues to be very, very intense. But there will always be some uncertainty, but certainly Russia's been aggressively exporting wheat, Ukraine the same thing, and for a little while it looked like it was to be suspended, but I think it didn't take long to get shipments resumed and more freight headed into that direction. Corn, as you mentioned, corn gave up all the early ground, and matter of fact, as you mentioned, ended up unchanged, but wheat also gave up all its ground, but then it found some strength late in the week, just on weather uncertainty and maybe just a little bit better demand. Both corn and wheat exports are been extremely slow. Right now, we're 650 million bushels on export sales behind the pace of a year ago. That's a lot for the U.S., and the USDA is going to have to step in next week in the WASDE and have to lower export projections by at least 100 million bushels, in my opinion. Now, the big news was the energy sector, which rallied. It was under a little pressure early, and then it of course, is always volatile. But we ended the week at another strong move, moving that December crude oil back above $92, up almost $5 in the week, and probably pushing that market up is the fact that diesel just continues to jump higher. Diesel or heating oil, whichever you want to call it, the same thing basically. And we have the inventories of heating oil or diesel are at decade-low levels, and they're just pushing diesel prices to record-high prices. So that's been very beneficial to soybean oil this week, and that was what pushed the soybean complex substantially higher. After being a little slow early in the week, it was where all the strength was. But as we came to week's end, we've got these like January soybean oil prices up near 75 cents a pound. You're at levels where it's going to make it a little more, it's not as economically feasible to move, say, a B100 product into diesel and make it as a supplement or a substitute. And also we're getting closer to winter. It's going to be harder to move those high-end percentage soy oil diesels into the blend because of the concern about colder temperatures and sludging, certainly in some regions. But that was pushed the market higher. Soybean oil was the backbone of the soybean complex this week and pushed soybeans 60 cents higher on the week. And then as we look for into next week, we do have the USDA numbers, which will be out on Wednesday. Update on the November production numbers. Both the corn and soybean yields will be adjusted, and we'll see the supply-demand projections adjusted. Once again, as already mentioned, I think you'll see the corn export number come down. Other than that, we'll see. There'll be a lot of things that will be there, but once again, I think the yields will be the most interesting. I personally think they either do it in November or January. They might just actually push that corn yield up a little bit, but I still think it's somewhere around that 71 to 72.5 level. Right now, I would anticipate that at least this week that they'd leave the soybean yield unchanged, but they also might do some reducing on the demand side there. We'll see how that develops. But I think the corn will be the one that will get a lot of the attention on the supply-demand side. On the week, December corn unchanged at 681. March corn also unchanged at 687. November soybeans, though, up 63 cents at 14.51, and Jan beans up 62, closing at 14.62. December Kansas City wheat 28 higher, closed at 9.53. The new crop July at 9.40, 21 higher on the week. December crude oil closed at 92.61, up 4.71 on the week. Did see lower cattle and hog futures this week. Really, I would just say to describe the cash enthusiasm kind of waned. You know, we've had some really good enthusiasm the last 3-4 weeks in cattle. We've basically gone from 143 to 150 pretty quickly, and you would call the cash cattle this week steady to just a little bit better in some regions. Packers have been able to convince a lot of cash sellers that they ought to start using the bid-to-grid system, which keeps their prices quoted down and helps them with their formula and their captive supply cost. But on the other side, the cash index on hogs continues to move lower, finally starting to see that seasonal weakness. It's not been so huge, but we are seeing some 50 cent, 75 cent moves down every week, or every day, and the pork product somewhat weak, but we're still see a big discount in the hog futures compared to where we are in the on the cash index, which is still above $90 as we come to weeks in. Concern about the overall consumer buying power. In other words, that macroeconomic concern still there and was accentuated this week, especially late in the week, as we talked about the energy values going right back up and diesel fuel prices being higher, substantially higher, basic record high. That certainly leads to concerns about the overall consumer buying power in the meat complex. December cattle 150, 165, down 135 on the week. February cattle down 198 at 154.37. November feeders 177.82, down a nickel. January feeders 179.67, down 70. December hogs 82.97, down 4.13 on the week, and that February hogs down 2.43, closing at 86.42.
And that's Darrell Holaday, Country Futures, Frankfort, Kansas. You can always learn more at their website. That's countryfutures.com, countryfutures.com. Do remember, though, trading futures and options involve risk of loss, may not be suitable for all investors. Do consider these risks before investing. It's Darrell Holiday's Commodity Market Recap on a weekly basis here on the Rural Radio Network.